Our brains are truly amazing things, constantly working to help us make sense of the world around us. However, sometimes they use shortcuts that can lead us slightly off track. One very interesting shortcut is called the anchoring effect, or sometimes anchoring bias. This happens when the very first piece of information we get about something strongly influences our later decisions about it. Think of it like dropping an anchor from a boat. That anchor fixes the boat's position, at least for a while. The first number or fact we hear can act just like that anchor for our thoughts, holding them in a particular spot, even if that spot isn't the most accurate or helpful one for making a truly informed judgment. This anchoring effect is a type of cognitive bias. A cognitive bias is a systematic pattern of deviation from normal rationality and judgment. In simpler terms, it means our brains have a common way of thinking that isn't always perfectly logical or based on all the facts. When we encounter an anchor, our minds tend to grab onto it tightly. We then adjust our thinking from that starting point. The interesting part is that these adjustments are often too small. We don't move far enough away from the initial anchor, even if new information suggests we really should. This reliance can happen even when the anchor number is completely random or irrelevant to the decision at hand. You might see anchoring happen in many everyday situations, not just in big financial decisions. For example, if a shop first shows you a very expensive handbag, then a slightly less expensive one, the second one might seem like a good deal. The first high price acted as an anchor. Or imagine you are asked to guess the population of a city. If someone first mentions a very high number, your guess might be higher than if they had first mentioned a low number. This shows how a simple suggestion can steer your thinking without you even realizing it is happening. It is a subtle but powerful influence on our perceptions and choices. So why do we call it a bias? We call it a bias because this anchoring tendency can prevent us from making the most rational or optimal decisions. If the first piece of information is misleading or not very relevant, then anchoring to it means our final judgment might also be skewed. It can make us pay too much for something or value something too little. Understanding this bias is the very first step towards recognizing it in our own thinking. By knowing about anchoring, we can start to question those initial pieces of information and try to make choices that are more carefully considered, based on a wider range of facts, rather than just the first one we encountered. The anchoring effect is not just a curious trick of the mind, it has very real and significant consequences when it comes to managing our money and making investment decisions. When dealing with finances, numbers are everywhere, and any of these numbers can potentially become an anchor. This could be the price you first see for a stock, an interest rate quoted by a bank, or even the initial budget figure suggested for a project. Because financial decisions often involve uncertainty and complex information, our brains might be even more likely to latch onto a simple, concrete anchor as a starting point for our deliberations and subsequent actions in the marketplace. A very common example in the world of investing is how people get anchored to the purchase price of a stock. Let's say you buy shares in a company for $50 each. This $50 price can easily become a strong mental anchor. If the stock price then drops to $40, you might be hesitant to sell it because you are anchored to the $50 you paid, thinking you need it to go back up to that price to break even. Conversely, if the price goes up to $60, you might be quick to sell, anchored again by that initial $50 purchase price and feeling you've made a good profit, even if the stock might have much more potential for future growth based on new positive information. Market predictions and analysts' forecasts can also act as powerful anchors for investors. If a well-known financial expert predicts that the stock market will rise by 10% in the coming year, that figure can become an anchor in many people's minds. Even if later economic data or global events suggest a different outlook, perhaps a much smaller gain or even a potential downturn, investors might still be heavily influenced by that initial 10% prediction. They might adjust their expectations downwards only slightly, still hoping for something closer to the original upbeat forecast, rather than fully re-evaluating the situation based on the newest and most relevant set of information available to them. Beyond stocks and broad market forecasts, anchoring can creep into many other financial areas. When negotiating a salary for a new job, the first offer made often acts as an anchor, heavily influencing the final agreed-upon amount. When buying a house, the initial asking price sets an anchor for the negotiation process that follows. Even the limit on your first credit card can anchor your perception of what a normal credit limit should be for you in the future. Recognizing these anchors is crucial because they can subtly steer your financial path, sometimes leading to choices that are not in your best long-term interest, making you spend more or save less than you ideally should. In the field of behavioral economics, understanding how biases like anchoring work is a continuous journey of discovery and refinement. For a long time, the anchoring effect was considered to be a very powerful and widespread bias, with many early studies showing quite large effects on people's judgments and decisions. These initial findings painted a picture of anchoring as a major force shaping our choices. However, science is all about re-examining previous findings, testing them with new methods, and seeking a deeper, more accurate understanding. This process of scrutiny is vital for building robust knowledge, ensuring that our theories truly reflect reality as closely as possible. Recently, there has been a growing discussion and re-evaluation of just how large the anchoring effect truly is. Some researchers have pointed out that factors like publication bias might have played a role in the past. Publication bias is a tendency for studies that find strong, exciting results to be more likely to get published than studies that find smaller or no effects. This can lead to an overestimation of an effect's true size in the scientific literature. Additionally, some of the earlier studies on anchoring might have used relatively small groups of participants, which can sometimes lead to results that are less stable or less representative of the broader population, potentially exaggerating observed effects. An interesting example of this re-evaluation comes from a study called the HomeVise study. The original study, published by Lee, Fuchs and colleagues in 2021, looked at how anchoring affected people's willingness to pay for gardening products. It found a significant anchoring effect, suggesting that the anchor price increased what people were willing to pay by about 31%. However, a more recent replication of this study, the HomeVise replication, published around February or March of 2025, aimed to test these findings again. This new study was designed very carefully to have higher statistical power, meaning it was better able to detect a real effect if one existed, and it used a much larger group of participants. The results of this large-scale replication were quite different from the original study. The HomeVise replication found a much smaller anchoring effect. Instead of a 31% increase in willingness to pay, it found only a 3.4% increase, and this small effect was not even statistically significant. This means it could have easily occurred just by chance. The researchers concluded that, at least in this specific context of willingness to pay for gardening products using particular types of anchors, the anchoring effect seems to be quite modest rather than large. This highlights the critical importance of conducting studies with large samples and careful design to get a more precise picture of these behavioral biases. Knowing that our brains naturally use anchors is the first step, but what can we actually do about it? It is important to remember that anchoring is a fundamental way our minds process information, so we probably cannot eliminate it completely. However, we can certainly become more aware of its potential influence and take deliberate steps to reduce its impact on our important decisions, especially those concerning our financial well-being. The goal is not to fight our natural tendencies, but to work with them more intelligently, adding layers of conscious thought to our instinctual responses, thereby guiding ourselves towards more reasoned outcomes. One very practical tip is to try to establish your own criteria or benchmarks you are exposed to a potential anchor. For instance, if you are considering buying a particular stock, do your own research first. Decide what you think the stock is worth and set a maximum price you are willing to pay based on your own analysis, before you look at the current market price or listen to anyone else's opinion. By setting your own anchor based on solid reasoning, you are less likely to be swayed by other, perhaps less relevant numbers that you encounter later. This proactive approach helps you to stay grounded in your own well-thought-out assessment. Another key strategy is to actively seek out multiple perspectives and diverse sources of information. Do not just rely on the first number or opinion you come across. If you are buying a car, for example, look at prices from several different dealers, check online valuation guides, and read reviews from various sources. When considering an investment, listen to a range of analysts, not just one. Also, be aware that anchoring often doesn't act alone. It can interact with other biases like overconfidence, thinking you know more than you do. or herd behavior, following what everyone else is doing. Being mindful of this broader landscape of potential influences can help you to make more independent and balanced choices. Finally, the journey to fully understand anchoring and its many nuances is far from over. The recent findings suggesting that effect sizes might be smaller than previously thought in some contexts underscore the critical need for more research in behavioral economics. We need continued investigation into how anchoring and other cognitive biases affect our decisions in various domains, particularly in financial education and advisory services. Future studies should strive for robust methodologies, including larger sample sizes and pre-registered analysis plans, to ensure that we are accurately detecting the true size and nature of these effects. This ongoing research will be invaluable in helping us all make better, more informed decisions in an increasingly complex world.